Hi, I'm going to do a very quick trade because it's bank holiday. And a warm welcome to one and all. And for those of you not seen me before, my name is Langers, and I am the overgrown child that is the Scruffy trader. No shock. And I am a child today because I've been playing with my favourite toys, my Star Wars toys. I have all sorts of them, all over my desk. But I have my favourite, my little very own Princess Leia. How good is that? Yes, Chris, I kept it. Little salute to you, my friend. No, I get bits and pieces sent to me and I always keep them. Anyway, that's not why you're here. You're here to sort of see what I'm up to and what the channel's all about, sort of thing. Well, it's mainly just me, a cup of coffee and the screens, and kind of showing you what I do on a day-to-day basis. Now, today is bank holiday, so the markets are pretty flat. Well, they certainly are for the pound, etc., because obviously all the banks are shut. And I want to kind of enjoy the afternoon. However, I still have to earn a living. And there's an opportunity presented itself. And it looks spectacular. Well, I'm saying it looks spectacular. It just ticks a lot of boxes for me. So let me just pull the screens up and I'll show you. I mean, normally what I do when I come to the screens each morning, I predominantly look at this lot. And there's nothing there today. Nothing. So I go to see what my filters are. Now, this is a sheet I make up every day. It's a strength sheet. And it shows the strongest and the weakest and the movers and the shakers of the market. And today it's picked out two, which is pound JPY and the CAD JPY. Now, normally I would discount this one because I like to see a red light, green light on the change. However, when I show you the chart, I'll explain why I like it. Reason bit up, talking of things I like.
There you go, coffee.
Well, I do like a coffee, because we all know Scruffy likes a coffee. He loves Winky as well. You're going to be nice to me today?
I'm always nice.
It's been bloody horrible to me this week.
No, you haven't.
She
You've
has.
been pooey.
Exactly. You know, when you're ill, you're supposed to be at home watching cartoons like this. But no, she dragged me down to the office to keep her company, and all I wanted to do was go to bed. Cow. Are you listening to this?
Yeah.
Yeah.
Mini violin on your shoulder.
Bloody hell. You might be laughing. I've got to live with it. Anyway, what am I looking at? Why do I like this? Well, it's because a strong directional move cannot continue. Strong directional move. Choppity, choppity, choppity. It's not going anywhere, and it looks like the sell-off is starting to build up. All right, which is here. And even if it doesn't, and it gets down into there, I'm still going to make 10, 15 pips. So it's ready to cook. So what we're going to do is we're going to start breaking it down. Choppity, choppity, choppity. It's pushed down. It's gone up. It's failed to make a new high. You can see that there. So that's telling me that the pressure is running down. Nice strong candle. The wicks are very small, so it's telling me there's lots of sellers in there. It's pushed down, the buyers have come up, and the sellers are coming back in. Simple stuff. All right. And that's what trading is. Trading is just looking at the different conditions. You see, it's pushed up, it's come down, it's pushed up, it's come down, it's pushed up, it's come down, but now it can't push any higher, and now the sell-off's coming. Simple. All right. 1, 2, 3, 4, 5. There's your bottom candle. There's your entry, which is break of this, and you can see it's coming in now. So we're going to start whacking where orders it. Okay. So keep it underneath there. We're going to go 5. one in. Get the next one in the same place. We're going to do this one at 10, just like so, as it's moving into the green. Get the next one into the same place, and we're going to put that one at 15. There we are. Okay. So that's nicely in. Kind of live with that. And what are we looking at? Right. What have I done and why have I done it? Well, essentially what I've done is, if I go back out to sort of the higher time frames, if you like. So we'll go out to the 4 hour. You can see a massive drive up. Choppity, choppity, choppity. And then there's your angle of descent moving down. Now, the first place this is going to test is a recent structure point. And the first one in its way is here. And then when you're looking at the way that I break my orders up, this is kind of the way that it is. I knew what the distance was between roughly where I was getting in and that. And then I divide it up. So in this case, it's up to 15. So it's 5, 10, 15. All right. That also marries up to the green zone that you've seen me mark on the lower time frames. I'll show you that in just a second. But why have I put 2 extra orders in? Well, you often hear sort of traders say they scale out of a trade when it gets so far. And I understand that wholeheartedly, and I agree with it. Reason being, nobody knows how far the market's going to move. When you're day trading, you're looking to get in and get out. That's it. When you swing trading, you're looking to hold it for a little while. But in a situation like this, you're just looking at the pulses. And 15 pips takes us to the top of this, which will be a reaction point. Now, if this is deciding that it's going to continue its journey higher because of this push, because you often see a flag formation, and a flag is kind of that. But then you could say, well, it's a pendant as well, because that's there and there. And I'm not a great lover of all these patterns. I'm really not. Because they look great in a textbook. But in the real world, they don't really work. But what you can do is you can look at what's happening in the chart and make an informed decision based on what you see. And if it happens to fall into some form of pattern, fantastic. Now, the first thing I'm ever looking for is a strong move. Why? Why a strong move? Because it tells you there's a lot of activity. And it's the liquidity and the activity that we need as traders to develop some form of a system, but more importantly, make some money. Now, whenever you see a strong move like that, there's a number of things going to happen. It's either a news event, all right, and it's going to alter the course of the market, and that means it'll sort of be a reversal or whatever. But also it means there's a lot of people caught on the wrong side of the trade very quickly, and they need to get out, and they have to get out because there's too much pain. But also, when there's a strong move like this, people are looking to take their profits. You'll also have people sort of taking an opposing position where they think, well, that's gone too far, I'm going the other way. All of these different things. And what happens is the market will stall for a little bit. And that's what's happening here. Because strong move up, now they're trying to work out which way the market's going to go. You know, if it's a continuation, it'll break out the top side and then keep on going. But in the meantime, like I've just said, there's going to be people with opposing positions, people that are trying to get out of bad positions, and then profit taking. And in that process, the market will sort of recede on itself a little bit. It always does. It has to, because the pressure has to be released, and it'll look for a level, because that's what the markets do. They form levels. Look, that's slammed up, but look where it stopped. Bang on a level. Very, very simple. Underneath, what did it do? When it was moving around, it found its way to a level. So I'm now just looking for a logical point that this could move to. And it's that. So it's kind of just my thought process anyway. So if I take it down to the hour where I was getting the decision in the first place, why am I entering it now at 20 past 12 when I could have entered it first thing this morning? Well, it's very simple, and I'll kind of show you. I don't trade opens. I think they are sort of the widow makers, if you like, which is here. So I sort of start trading at around 9 o'clock, or I sort of look to be getting in from 9 o'clock onwards. This morning I was busy with the 5%ers, as we can sort of see. I get it across. Oop. Wrong screen. This one here. I've been working on this one this morning, and this is the other market that the sheet pulled out, which is the pound JPY, and I'm working my way on this. It's already had a little bit of money out of it. Not the best. I've got some orders put in place, but there we go. It's had some money out of it already. Okay, and that's just a little account that I'm building up little by little, and it's doing quite well. And then the other market was this one, so I'm kind of keeping an eye on that one, building that up, and I'm going to trade this one as well. That one was a slam dunk because it followed all of my rules. This one is another one, but it had more potential to get a quick day wage out of it. So I thought I'd just concentrate this afternoon on this, because I don't trade a lot on a Monday for my wage account. Reason being, it's a tough day to trade, and today's bank holiday, and I was just having a bit of a break, so I thought I'd just have a quick snap at it.
Good job.
Anyway, let me play the trade out, and I'll come back to you at the end.
Boys and girls, while my trade's running, we're having ice cream. This is the best way. Isn't that right?
It
You
is.
think it's the best way?
It is.
Yeah? What a beautiful place this is. Look at that behind me.
No way!
And there we go, boys and girls. All done. I've come home. Everything's stocked out. 250 quid while I was having ice cream. Now, please tell me, is that not easy trading? Because to me, that is the perfect situation. And I'll explain the perfect situation in just a second. But first of all, I'll just quickly kind of recap what it was I did and why I took this in the first place. So if I pull up my sheet, just here, as I was saying earlier, I look to identify product. The sheet pulled out 2. Now, normally I like a red light, green light, unless there's an exceptional circumstance, which this was. And that was that massive drive that I was going to show you. And from here, I then look over on the heat map to tell me where to get my trade idea from. Is it going to be on a 4-hour or a 1-hour? So that was the first part of the puzzle. So if I take this out to the 4 hours so you can see what it is I was looking at. Just kind of get rid of that. That's what attracted me. You know, it was the first thing that I saw when I looked at this. Thought, this is pretty much ready to go. You know, choppy, choppy, choppy. Stalling on this level. And as you can kind of see, it had a good pushing up and then it came back down again. All right, bit of indecision there. But this gave me the idea. And then when I look at my indicators, etc., they confirm. And it's just basic stuff, guys, that I use. It's just basic indicators. But I'm mainly looking at the price and level. Then drop it down to kind of a trading chart, shall we say. See, when I'm looking at an hour, I will then look at the 15-minute. But in this one, I started looking at the hour. And if we pull this down, well, there's the 9 o'clock candle. I wanted to see a tag and a rejection. Well, it was there. There's the 10 o'clock. And that is the rejection that I was looking for. So that gave me go time. And then I just wanted to enter. And when I enter, I'll just drop it down to a lower time frame again. Look for a logical point. And in we go. Simple stuff. And I repeat that over and over. And it's kind of what makes me consistent. But the other part that makes me consistent is the fact I don't chase every move. I really don't. And I know there's people out there and they're so, you only ever show your winners, one thing or another. What you forget is I trade once, twice a day. So my hit rate is pretty high. And I verified that with the 5%ers account. You see it runs 86, 90%. So of course, a lot of what I do is going to be winners. I do lose. I show my losers as well. It just so happens I'm having a good run at the minute.
Isn't that logical?
But with that said, I'm also looking for the perfect trades. And that's what I was alluding to, perfect trade. And it's just a certain set of conditions that you can easily recognize and repeat. And that's exactly what you're saying. An absolute drive up into a level that I've already established that is strong, and it's failing. It can't break the level. So it has one other choice. It's either going to chop. Well, then you look at your ATR, as I did. I can see it moves 55, 60 a day. So for me to target sort of between 5 and 15 pips, which I was doing, was reasonable. Okay. Did I think it was going to be done in 10 minutes? No. Why? Because it's a very slow market. So I look at a 4-hour candle and give it the time to breathe. And that's why I went out this afternoon. It wasn't a case of monitoring this like I would on cable every 15 minutes or every hour. 4 hours before I even consider looking at this again. It's kind of the beauty of looking at the bigger time frames. So I went out, had a lovely ice cream, saw the countryside, and what's better than that? I mean, is that not the perfect trade? You know, because I genuinely think if you're a slave to the machine, there's something not quite right. I sit in front of the screens for a single reason. I want to. I enjoy it. I like it. And it just fascinates me. So that's why I do it. But I also recognise the fact I have a life, which is why I arse about a lot. And if I get an opportunity to go out, I still can, because I have absolute faith in the trade. And if I'm wrong, I do have stops in place, as much as you don't see it. I genuinely believe your stops and your profits are two separate things. It's something that I touched on in the live stream at the weekend. And I hope the guys, if they're watching this, will chip in and sort of say that's what we were doing at the weekend, because they are separate. Your stops have one primary sort of function, if you like, and it's just protection of the account. That is it. So I don't think about it. I'm at peace with what the risk is before I'm starting to look at the profits. Then I look at what I can get out of it. They are completely separate. I don't go for this risk reward ratios and all of that, and to be honest, I don't go for a lot of what educators say. I think most of it is just snake oil and just bollocks. And why do I say that? Because I've done this 15 years and I've been down that road many times, and it is just horseshit. It really is. A lot of people might not like what I do, but that's c'est la vie. That's up to you. If it works for you, great, you know, but don't slag it unless it's working for you. And that's what I will say. If you're mega profitable and you make a living out of it, you can slag as much as you like. But if you're unprofitable and you can't make it work, it's a case of,
Yes, Bo. Shut your hole!
because your argument won't hold any water. Anyway, that was today's trade. A little bit of a grumble, I guess. But I've had a great day. I've had my ice cream, been out in the fresh air, spent time with my best friend, and I made some money. To me, life doesn't get much better than that. That's what we're here for. We're here to enjoy ourselves. There's not a day goes by that I'm not happy. And I'm happy because of the screens. But more importantly, I'm happy because of the person that I spend my time with. So on that note, do what you love, and the money will follow. See you all in the next one.